Eric Mother.com with the weekend market analysis for the weekend of August 5th and 6th, 2023. With about 1 minute to go, this is how your markets are shaping up to end the week in what was net a down week. As we can see, this is how the US major averages are trading, and we can see here BTC trading at about 28,987 and Ethereum trading at 1828. Now let's take a look at the summary for the week, and what we see here is generally for the week markets did close there. We can see for the week we are down across all of these markets, US indices and also the cryptos. S&P 500 down 2.3, NASDAQ down about 2.9%. Let's take a look at those charts. This is the S&P 500 5-minute chart, RSI setting of 26. What we got here is, I'll draw a line and you see where the market been struggling for this week. If we draw it like such, and what this gives us is, if you are watching this line here, we get the break here, this big gap down, resistance here, swing to a down, resistance here, and all of this happened here in the last couple of days. And then what happened is we come back and we test this RSI lows line. By the way, early on this Friday morning, we held here and the market had a nice recovery move. Later on in the day, it came and tried to hold the line and failed. So it's upon that failure that we see that the market took this slide into the end of the session. Now the big question actually is this just a normal pullback, or is this market setting the stage for a massive bear market? Taking a look at the S&P 500 hourly, and I'll show you how there's two competing time frames giving us very diverse suggestions as to what to anticipate here. This is the S&P 500 hourly. We got this line here. We can draw it that way. That could offer the S&P 500 hourly support here. If we can hold, we can start bouncing here. And there's also another way of looking at it with the same conclusion, which is draw this line here of March lows, and I'll just draw it right there. So coming off the lows of March, we've been holding every time we come and hold this area, which is around RSI 38.2. This becomes an area of interest for a rebound. So if you understand this, you can see that this has been very successful in telling you where the market was gonna pose. And we can see here the possibility, if I zoom in on the hourly, what I'm saying here is we have this movement to the downside here over the last day or so, and this is now with the possibility of the market forming positive divergence. So you take that situation, and what you see here is a possibility that this could coil on an hour-to-hour basis. And I'll show you the daily in a little bit, which could also be lining up the same way. Now, if you're looking for at least some market momentum higher, the market would have to clear this line. Again, we can see at the highs of Friday's session, we tagged it here, which is also around RSI 50, and we had this reversal intraday. Now, for a couple of weeks, I've been talking about this level, which goes back to the high here of early 2021, and I've been using that to gauge where the market is favoring upside or downside action. So this is the level here, 1495.47, give or take. And what we see here, if I draw the line, gives us good understanding of how the market over the last, let's say, 2 years has responded, because we can see area where we have resistance here, areas of a break. We break there, turns into resistance, and we've come here turning into resistance again. And also when the market was in favor here, we had a breakout, we found support here, and we found support. So we can say that net above the line, above this area, the market has been behaving well. The problem is right now, if you're bullish, you're faced with this scenario where we are back below this line, which favors the downside. Are we broken? Not yet, and I'll show you that here in a little bit when we take a look at the daily charts. Taking a look at the Dow Transports. Also, we can take a look at the Dow Transports from a monthly perspective to understand that there was a breakout last month, and so we see there's a breakout here. This is the level, the highs of 2021 on a monthly closing basis. We closed higher at the end of last month, and now we are back below that level. For the Dow Transports, that level is 16478.26, which is this monthly closing high right here. So right now we are seeing the Dow Transports also confirming a failed breakout. It's early in the month, so we might still be able to recapture that level above it. But for now, early signs of a failed breakout. And also we have this scenario where we can see where we break down here, and this break corresponds with coming off the highs of late 2021. And if we take that level and draw a line as such, we can see the market is very aware of that break level now that it is coming back to test it, and we seem to be failing. So again, the big picture charts, as you'll see across many markets, are turning bearish And if you are bullish, as far as the market expectations are concerned, you do need to appreciate and understand that this big picture scenario could turn bearish and even turn bearish in a huge, nasty environment if these charts do not change, the big picture charts, that is. So by the way, I hope you saw that. I was drawing this. So there's divergence here. We were going lower as prices made an improvement. And this improvement with negative divergence could set the stage for a meaningful reversal lower. Now, of course, the market can fix this by clearing this level here and also by continuing with this breakout, which brings me to another chart here that I've been tracking. This is Semiconductor Index, and just want to show you on the monthly. Maybe we should go. So on the monthly, you'll notice there's a break here, which is coming off the highs of late 2021, early 2022. We go into this huge drop in the market. And what we are doing essentially is coming back to test that line, or the break line. Based on my uniformity concept, we seem to be showing resistance. So this by itself is suggestive that we are in a different environment, one that is gonna be favoring a market that is gonna start slowly going down and ultimately start picking up momentum to the downside. Not only is this black line an issue, I want to show you that there's another line that is probably more telling. So again, Semiconductor Index, and we're going to go back all the way to the lows of late 2008, early 09, and I'm going to draw a line as such. And you see that this line connects to the double bottom lows here, touches this double bottom lows in late 2018, lows of 19, lows of 2020. And it also gives us this break of a trend here. That trend break is what begins this massive slide. And you'll see that the market is aware because now we've come back to this level and we are again showing resistance. Combine that with the previous line, you can see that this scenario by itself is one that the bulls have to pay attention to, because this by itself is a sign of a market in need of a massive bear market plunge. And this is not the only market. If we take a look, for example, let's go across the globe a little bit. Let's take a look at Japan. So we can see the Nikkei here on the monthly, and just want to draw a simple line that could also be suggesting topside resistance on the monthly. Can't ignore that. And it's also massive divergence. As you can see, prices did go higher, but your RSI is definitely pointing down, which is also confirmed by the MACDs making this divergence. So this by itself, if you didn't have any other chart to go with and to go by, you'd have to conclude you need to be out of the market if you're bullish. And we can also see other markets. For example, if you take a look here, quick look at the Nifty on the monthly, and I've talked about this over the last couple months. And here we are seeing an improvement, another improvement, but this is coming with declining technicals net. So that's divergence. And in fact, if you zoom in a little bit, as far as the Nifty is concerned, you can see that this is where we break down. This breakdown here, I'll draw it as such. And what this captures is, maybe I should change the colors a little bit so we can see it. So this break here corresponds with coming off this highs of early 2022, resistance here. So all of these were reversals on a month-to-month basis. So we begin the month with a resistance around 20,000. Looks like we might be setting the stage for some type of a pullback, but I'll show you the dailies here in a little bit, which might be saying something different. Bank Nifty for the month of August 2023 is down about 1.6 for now. Take a look at this memory. So instruments have a tremendous memory. You can see here, take the top side, and you can see the Bank Nifty is showing resistance on this long-term monthly top side line going all the way back to 2004. So about 19 years of monthly data, or a 19-year long trend line. So this is a resistance that one needs to pay attention to. Again, as long as we are seeing this resistance and we start drifting lower and lower off this level, the more we drift farther and farther away from this resistance line, the more this is confirming that the market has set the stage for a massive bear market reversal lower. As I said, I'll mention the daily charts here. Take a look at the Bank Nifty on the daily, and we'll see this with other daily charts. There's this area here based on my uniformity principle. This was a reversal of March, and we can see we are coming back here. And again, early August, we've already found support. So the daily is showing there that support has already been found. Also happens to be around an area around an upward sloping 50-day moving average, a logical area you'd anticipate that institutions have an interest. And taking a look at the Nifty itself, just another way of looking at it. And this time we're going to draw RSI lows line as such, again connecting the lows here and here. And again, we've bounced back on the line and also back above RSI 50. Take a look at the NASDAQ on the daily. We're hugging this RSI 50 area, and I want to draw a simple line here that connects the recent RSI lows. And again, what this is suggesting is that we are still within a normal pullback situation for now. It's only when we break this trend line, which is going to sync very well with the long-term monthly charts, a break of this trend line would really push markets lower, and those monthly charts would be confirming, yes, we've changed the environment and now we are ready for a bear market situation. But what I think here is, for now, I'm leaning towards the market. It's my own personal feeling that this is going to hold. We are trading well above the 50-day moving average, that ultimately we are sideways here for a while before possibly attempting another breakout. That's what I think, but we shall have to take it day by day. By the way, which brings me to another observation, which is Apple, which was down huge on Friday. Huge gap down here, huge gap. And so the question is this done? Is this leading the market lower? Well, let me share with you what I think. So you got this RSI lows line, and then if you take this area where we come off the early 2023 January area of the lows there, what we're going to do is draw a line as such. And you can see that the two lines are exactly where we ended the day, which tells me if this holds, even Apple is going to mirror the NASDAQ, and we're going to find stability, and over time, it's going to be moving higher. Which brings me now to the S&P 500, and we can see also similar situations. Again, the daily charts offering some support as we go into the weekend here, and it is a simple line connecting RSI lows. I'm going to draw it this way, a little bit of a variation, but what this line does is connects to most of these lows here. Most of these lows are on the line, so I'm going to use this as legit. And so what I'm thinking here is S&P 500, if it can hold here, then and back above RSI 50, expect a big up day and a reversal higher. And also we need to understand that if we break and if we stay below 50, that's going to push this market way below where it is currently trading. A quick look at GLD, and the only reason why I cover this is because there's always interest for me to cover GLD. But to be honest, this has been a market that is down to sideways for quite a number of years. Nothing has changed. It is still in this sideways, no going anywhere situation here. And so I'm going to conclude the same, that this is still a market that probably next year at some point, would be my guess, when it can move its RSI to 3-year highs, is when we should have some interest. For now, I would say it's going to be generally in this sideways messy area for GLD, which brings me to XLE on the monthly. This is going to be also my comments for crude oil. We've seen crude oil have a nice move recently, and as long as we are above this RSI breakout line for XLE, we can see that crude oil should be favoring itself in terms of support on this line has been where it has been regaining after pullbacks. So as long as we're above the blue line, or this area here, generally this where it broke out, as long as we're above the two lines, even XLE looks to be sideways to high. Now, if we end up breaking below this level, for example, this breakout level, if we break below that, then of course now we have to change and anticipate a market that is going to favor more of a downwards trend. Taking a look at BTC, we can see BTC has generally been hugging this tight area around a flattening out 50-day moving average. So sideways, it's not the worst, but also no momentum. And we can also see from the daily, there's this bottom side support and top side resistance line that are forming a wedge. So we can anticipate here that what could happen here is we might clear this area to push things higher, or we might end up breaking below this wedge. And if we do break below the wedge, then of course we are going to be moving lower, of course, to come and test initially, at least test this 200-day moving average, which has been offering support for 2023. So very tight base. In fact, you can see this on the weekly. It's a little bit drifting lower. The base is starting to drift lower, but we've been in this very tight range. And so what is needed is obviously a breakout, and that should be at about 30,000, maybe 300-ish for BTC. And that breakout is what could really bring in more players into the market. Right now, people are waiting for some direction. Maybe a breakout is needed for bulls to push things higher. On the monthly, as I've been saying, there's this line here. So this back test line is what caused the recent resistance area, which is here on a monthly basis. So if BTC is to have any joy in the coming months, it has to take out this line to the upside, which would also coincide with what I'm stating here. It needs to break out above the recent monthly closing high at about 30,300, depending on whatever exchange you are using. Blessings.